Everybody, what is happening? It is Bill with Franklin Loan Center, and today I'm just thinking about where we are with interest rates and then the pressure that the president is putting on the Fed to lower interest rates, right? And I mean, we've been hearing a bunch of rhetoric and seeing tweets and whatever his Truth Social's posts are called, and talking about basically he's calling for the Fed to get fired. Although even as early as this morning, he's sort of backing off firing him some, but doesn't appear to be letting up on the interest rate part, right? And I just think, I mean, for those of us in real estate and those home buyers out there that are thinking about buying and selling and all that good stuff, I just, like, for me, I just think everybody needs to understand that, and we've already seen this as late last year, where the Fed can absolutely drop interest rates. The overnight Fed funds rate, the Fed, that is the one interest rate that the Fed, that a human actually sets, one human or a committee in this case, the Fed sets, right? And they can drop that rate. But as we saw late last year, they can drop that rate, and the market for the bonds that we care about, which is, it's really just Fannie and Freddie bonds, like all the mortgage-backed securities that are out there, that market doesn't have to pay attention to what the Fed does, right? I mean, that's other investors saying, wait a minute, I mean, okay, so the Fed's freaking out. So they're lowering rates. It does not mean all of a sudden that they're going to start accepting lower returns on their investment into mortgage-backed securities, and then the same goes true with treasuries and all that. And why, right? And so this is the thing that I'm not sure. I kind of want to make sure everybody sort of understands, right? So the Fed drops their rate, fine. Banks overnight trading, they take care of themselves, right? I mean, so that part's taken care of. But if the other markets, but what's tough is, like, there's an argument right now, I believe that, yeah, like the economy's slowing. I think some of this tariff stuff's even going to slow it more. We're going to see what happens there. But, in a slowing economy, it would generally make sense for the Fed to drop interest rates, right? I mean, that's the drop interest rates. Hopefully the bond markets follow that, and that gets some spending going, right? You can borrow money less expensive, get some spending happening. But like the other side of the coin right now, and again, particularly with tariffs, I don't care how you slice that, tariffs are inflationary. Like, I don't care what anybody says. Argue with me about it. I'd love to hear a really strong argument for how it possibly isn't. But in the short term, as long as those tariffs are in place, there's no question it's inflationary. And so that's the other side of it, right? So in inflation, the Fed should be increasing interest rates, right? And so puts the Fed into a really weird spot, and it seems that they may just pause again. We'll see what happens as we get closer. The next meeting's a couple weeks out. But the bond markets, again, this is where the smart money is. They're seeing, I mean, they certainly appear to be saying, look, I'm more concerned with the inflation than I am with the shrinking economy. And we're seeing, again, just pesky high interest rates just hanging in there. And, until something breaks there, I think that's what we'll continue to see. Now it'd be interesting to see, like, a deal with China or one of our really big trading partners could make a difference. Continued rhetoric could actually make things worse, right? And so we'll have to see what happens, but I just want to make sure that everybody's really tuned into the fact that whether the Fed drops rates or not, that does not necessarily mean it's going to correlate to lower mortgage rates. And the mortgage rates are already signaling that, look, I mean, if anything, they're kind of hanging tight and even up a little bit from where we were just a month or so ago, and the reason for that is to me it's only one answer, and that's they see the possibility of inflation. So we got to wait and see what happens here. But the White House can put all the pressure they want onto these different, onto the Fed and all this other stuff, but the bond markets will decide on their own what they think the rate should be, and we're seeing exactly what they're saying right now, and it's definitely not a big move down. So fingers crossed we see some good things come out of these tariffs, like tariff war or whatever, trade war or whatever, and we really do see some progress. Hopefully that'll happen. We'll see. But in the meantime, don't expect anything big regardless of what the Fed does, is my general thought. So that's it. I'm Bill. I'm with Franklin Loan Center, and I'll see y'all next week.